Welcome to this week's strategy session. Great to have you with me. Lots of interesting things to go through today. We've got the ASX 200 up near its all-time highs. We've got the small ordinaries, all those commodities, gold on the cusp of breaking out of this big range. And I've got a couple of interesting stocks to show you, which are on the really on the launching pad as well. So it should be interesting to have a look at them. Now, everything today, of course, is general commentary only, no personal advice, general only. Having said that, I think we should get straight into this first chart. So here we go. We've got the ASX 200, and it's been a pretty interesting week with how things have gone. In that, it's really been quite subdued compared to what we've seen over the last few weeks with this nice bounce off the 50-day moving average, the new all-time highs. That was last week. The last few days, it's really been quite trading just below the previous peaks at this overhead resistance. And I think the big question here is: are we about to get a run of new all-time highs, or are we going to see the market pause and catch its breath? And my feeling really hasn't changed since last week, in that I think the market is heading towards some type of a pause. I just don't think there's been enough consolidation over the last week or two to really correct the big run we've had from the October low. So that has been a large rally, and there hasn't been, I don't think, a long enough pause to work off that rally. And I also, when I look at this, it's still a case of these prices are somewhat stretched above the moving averages. It's not excessive, but they are elevated. So it does seem like there could be some sort of pullback in the makings toward the averages. Now, the averages, which I always use, or usually always use, are the 50-day and the 100-day. And they're good. I find they're a good moving average length for someone who's looking for medium-term trends in the market. And and we also have that resistance, the resistance that comes in at around 7,640-ish, these previous all-time highs, the high from December, the recent highs. It has edged above, but I wouldn't really call this a decisive break at the moment. Look, I think the fact they've seen a new all-time high, I think that's positive. And new all-time highs often lead to more, or they often lead to more new all-time highs. But markets still pause, they still consolidate. So that's just why I'm reluctant to chase the ASX 200 at this current point. There's also the case of the divergence which we're getting in the RSI. So just quickly, I did show you this last week, but I just briefly put it up again. So RSI is a relative strength indicator, or index, relative strength index. I use 14 days. It's a pretty common setting for these things. And the divergence is that when you look at the chart, you can see the ASX 200 has made a new high, but we look down here at the RSI and it hasn't made a new high. So it's what we'd call a non-confirmation. Now, divergence is, for me, divergence is a bit like a barometer, like a barometer we might use to read the weather. And it can provide warning signs that conditions may be changing, but just like the barometer you use for the weather, it doesn't always play out. So I think this is something just to be aware of, and we're doing it in conjunction with other things like the distance above the moving average. We're looking at the overhead resistance, and we're just bringing a few things together to say, look, maybe the market could pause. I'm certainly not suggesting this is some sort of a topping formation, just the potential for a pause in the trend, which could last several weeks or even longer, but a pause, not a top. And I remain long stocks. It's this is the story which I've been telling you for a while. You saw my portfolio a few weeks ago. I'm long stocks. That remains the case. I've still got cash on the sideline, and I've been thinking over the last few weeks that I really should have moved more of that cash into the market in December when we started to get above those moving averages. but of course, that's hindsight for you. It's always the case that you wish you had more in the market when prices are strong, when prices are rising, but then when they turn down, you also always tend to think, oh, look, I've got too much. I wish I had less. So, it's just one of those things. We never get these things spot on, but follow your rules, follow the trend, and try and get it as right as we can. Try to do the right thing as often as possible, and but perfection is tends to be one of those elusive things. For me now, it really is a case of staying with stocks that are in uptrends and looking for new breakouts. So the stocks I have that are up double digits or even triple digits, it's not like I'm going, look, I should be locking in a profit now because markets are high. I want to leave that upside open. I want to see where those stocks can go. And I think the biggest regret a lot of people have is they sell their good stocks too early. Uh, um, I think that's probably the biggest run. I think that's probably the biggest risk of at points like now is that people get out too soon. The thing I'm really focused on is this is a really big range the market has been in, or the ASX 200 has been in for around 2 years, and we're currently on the verge of a breakout from this range. So it's not confirmed, of course, that we get this ongoing breakout, but it looks close. It looks like it's in the makings. I think that's where the probability lies, and the way that I get those big 100% winners that I showed you a few weeks ago is that I stay with them. I give them room to move, and if we do get a pullback in the ASX 200, well then that could potentially set up an opportunity to get into more stocks and get more money into the market. And I'm going to tell you about a couple of interesting setups in a moment, and both of those look like they could be ready to go. So they're I think they're well worth having a bit of a think about. But we'll get to them a little bit later. Now I'm going to move on to the small ordinaries in a sec. Move on to the commodities after that, and then those two stocks. But of course that wraps up the free section. So I'm going to move on now for strategy session members. So if you're not a strategy session member, please come across and join up. And it doesn't cost you very much. It's a really low cost option. And of course, if you're getting value from this, please hit that like button, leave a short comment. It really helps the channel when you do those things. Now, okay, let's move on to the small ordinary.